Guten Morgen. Let's get on with it. It's now 8:02 in the morning. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I am here to serve you. I am a humble servant. My focus is foreign exchange. Yeah. I like commodities, I like currencies, I like stock indices. So if you want to talk gold, oil, and Bitcoin, holy smokes, if you want to talk about Bitcoin, we can do all of that today. Just let me know, ask questions in the chat, treat each other with dignity and respect. I don't mind having fun, but you are in my home office, so keep it professional. In the description below the video, there's a link to my book. Check it out. There's a link to a 2-hour webinar on how to do macroeconomics, where to get the information, and how to do everything for free. Check it out. There's a link to fxbootcamp.com. Dozens and dozens and dozens of hours of training for $88 a year. There's also upgrades to live trading groups. You can check that out. There's a link to Quant-in-a-Box, a process to automate all your macroeconomic analysis. Check that out. There's a link to tradersway.com. You've been searching for a trustworthy and ethical foreign exchange broker. Well, guess what? Traders Way is it. Go check them out. So, without further ado, let's get on with it. Emerald says, volume, can you be more specific? Too high, too low, just right? Alrighty, indices currently, US dollar is sort of slightly strong. Yens are mostly weak. The pound got crushed by high inflation readings today, but will probably come back. This idea that the economy sucks, the pound weakens, but then they're going to have to jack up interest rates, which would then attract money back. So there might be an opportunity on the pig today. Aussie's weak, Euro's mostly strong, CAD is mostly strong, Kiwi is coming and going. Coming and going. So let's start with stock indices. Okay. We've been watching a big pullback in the German stock market, right off the projected top, then right down, 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 up, up, down, 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 up, up, and today was a down, 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 down. Holy smokes, that is important, but the idea is that we knew this at the beginning of June. That was our target. Holy smokes, eh? Oh, for sure. So that is hugely important. What about the UK stock market? Okay. This is the best selling price for the month if you're a bear. That's the one you're hoping for. And holy schnickerschnocker, that's working. That's working. And so now we have, okay, German stock market. We have the British stock market falling. OMG. Here's the American stock market, the S&P 500. And for the first time in a long time, that's quite a drop. Okay. Off of, okay, the extreme. This is an R3. We're not there very often, but when we get to an R3, it tends to be supremely important. Look at this. It's no random walk down Wall Street. Okay, so the last chance for this to go up is kind of now. If it doesn't go up today, holy holy smokes, fellas, ladies and germs, it's technically important. Okay, so now let's put it in context. The broad markets in the UK, in Germany, and in the United States all show sudden weakness in their equities. Japanese stock market regaining strength. Now, we planned this out, not on this chart, but somewhere else on my trading platform. I have this set up as a head and shoulders. Okay, so I had it marked like this. So be very aware that if those other stock markets are coming down, maybe it brings this one down. Now, there's a lot of energy pushing this up, but nonetheless, if you're using technical analysis, you should be aware that that's a reasonable risk today. But if it continues going up, then you're going to be short the Japanese yen pairs. Okay? And since there's a fundamental rationale for this uptrend, I would have to think that that's going to continue. That it will end up doing this. But we don't know. Right now, that's not the risk. The risk is this way, especially with all the other stock markets heading down. But, okay, the Nikkei is a whole different beast. Okay, here's my Dow. And once again, like so many of the other stock markets, this is the projected high for the month. And holy smokes, did it respect that? So just like I showed on the Nikkei, there is a risk down. Okay? So this is your best value play. So you want to look at the stock markets. They are different. So S&P 500, right, has quite a few growth stocks in it. So there's inherent volatility. It's a broad index. It includes mid caps as well as big caps and value and growth and all that kind of stuff. NASI is much more volatile, has a higher beta because it has more percentage of growth stocks than the S&P 500. So there's less stocks in this indice, but the ones in this indice tend to be growth. Okay, S&P 500 is growth and value, large cap and mid cap. So much broader. And then when you look at the Dow, there's only 30 companies in this Dow. And there's not really any mid caps, right? And there's not really growth. So really, this is your value play. If you're looking for, let's say, lower volatility, but more consistent returns in regards to, a beta, which means, look, if you're just trying to capture the stock market and you want slow and steady versus 20% up, 15% down, then this is where you would put your money. So a little quick breakdown of all of that. Did I miss anybody? German, UK, Japan. Yeah, that's good. That's good. All right, so let's do some commodities, gold, oil, and Bitcoin. What do you stink? Smell like a plan? All right, let's look at this one. Okay, and it is trying to come down again. Good, good, good. One of the things we were talking about just yesterday, I think it was in the Stop, Look, and Correct session. And for those that are not members of FX Bootcamp or not members of any of the live groups, both live groups, the swing trading group and the day trading group, get together on Tuesday afternoons, and I review your trade plans, the ones that you're going to take, the ones that you did take, your winners, your losers. But members post plans, and I work with them, so they take the mic and camera, and we work together analyzing what they did, how they did it, why they did it, or why they plan on doing it, and they get personal feedback. Very, very, very cool. I think I went 2 hours yesterday just giving people feedback. I highly recommend you join FX Bootcamp and then upgrade your account to the swing trading group. It's $99 a month. We meet probably close to 5 hours a week. Okay. Anyways, one of the things I talked about yesterday is the plausibility that we're on our way to 1800. Okay. So here we are in this consolidation. Okay, and we're not quite there yet, but what could happen, again, I emphasize could, is something like this for a while. And then we target this. Okay. Okay. And that would be if the stock market continues to work its way down. Cool. We talked about this one last night in the Stop, Look, and Correct session. I believe it was Jim's trade. And back then it was only 28,000. He was long, of course. Now we're at 29,000. Wow, huh? That's right, man. And the interesting thing about that is what we were discussing was the S1R1. So the most conservative of those that are trading Bitcoin, which is kind of funny, right, because of the volatility. But the expected move, if you're going to use both technical analysis and specifically in that pivot point analysis, the expected outcome has happened. What happens from here is unexpected. So if you were conservative and a shorter term trader, okay, you're like President Bush standing on the aircraft carrier with the sign across the background saying, "Mission accomplished." Okay. But the thing is, it can do, oops, that's not what I want to do. Okay, it could do this or it could do that. The thing is, you could split the difference. We call that the law of average. If half the time it fell and half the time it rose, to fully capture that, you'd get out now. Right? If you looked at this like 50% chance it goes up, but 50% chance it pulls back, then to capture, right? To capture that over 1,000 periods, like over 1,000 times. If you saw this 50-50 move 1,000 times in a row, the best way to play it is just to get out here. Because that would be the average price. And you'd face no risk and collect the expected outcome. You see? So anyways, job well done. Jim nailed it. So that's a bit risk on, but that's not actually risk on. What we discussed last night was this has to do with the SEC. specifically the SEC, I don't know the language to use, but let's just say banning crypto that is not Bitcoin. So if you can't buy Litecoin, if you can't buy Ripple, if you can't buy Cardano or Solana or whatever, if you can't buy Shiba Inu, if you can't buy Dogecoin, what can you buy? Bitcoin. So even more specifically, if you're a hedge fund, an institutional investor in crypto, and you're worried about regulatory risk and compliance risk, but you want to stay in the crypto game, you're like, hey man, SOL, not shit out of luck, no, Solana, regulatory risk, so you move over to Bitcoin. And you're like, same, right? Same, only different. Cool. Hey, did you click the thumbs up button? No, I don't think you did. My WTI sitting on 71. We've been here a while. And so if we were to do, let's do this. Let me put it here. This, and delete. This is the weekly sell zone. This is the weekly buy zone. It's interesting that the sell zone is bigger than the buy zone. And we're right in the middle. Okay, so if I were to analyze this, the bears are selling where the bears are supposed to buy or sell. The bulls are buying where the bulls are supposed to buy. And we're kind of in the middle here. So I don't know if I really love a trade today on this, but I would really pay attention to this little range here. Okay. We might be in a scenario like this over the next 2 days and maybe breach above 72.5. What do you think? Smell like a plan? Work our way up to 74, 75? It's neither here nor there. If the stock market's coming down, you would assume this would come down too. So this trade would only be, for today. And it would fail if we're not going up. Yeah, thank you. Yeah, thank you. You're welcome. You're far too kind. All right, let's do the yen pairs. Let's do the yen pairs. Great big pig today. Well, the setup from last night, let's do this in a brighter color. The setup from last night was we were sitting on the 21 EMA, should go up. Then we found out 8.7 on inflation. This came radically down, which is interesting because the economy is bad, so that's bad for the pound. But then people might wake up and say, well, hey, dude, if they have 8.7% inflation, they're going to have to raise interest rates much higher, and that actually brings us up. So this might be an interesting opportunity for you today. You might want to chickadee check it out because we're right on the line. Okay, standard trap and break strategy. Okay, you buy at the lower bounds. Kitty cat, that was a buy at the 4 hour last night. Pretty standard trade. Okay, we have a 5A cross up, kicking off the 21 EMA. Foil goes up, boom, boom, boom. No, Greg, I haven't heard anything. Kiwi. Okay, big move up, hit target, down into a roll reversal. It's not as good of a trade as the other ones, but it's holding. It's holding. It ain't not down. No, yeah, it is not down. So I'm just trying. I'll never get double negatives. I'm trying my best. It ain't not down. No, it is not down. It ain't not down. Yeah. Anyways, it's holding. Okay. Yeah, it might do that. That's true. Well, the idea is if you had bought it down here on the roll reversal, and I drew this several days ago, well, you'd be in it and you'd move your stop to break even. Okay. So there's your Kiwi. It's not good now, but it might be changing. USD yen, I thought I was in this trade, so I don't know what happened. I thought it was on this trade, but there's the standard trade plan from last night. By the way, in the stop, look, and correct session, not only did I say this could go up, I pointed out that it's an old trade plan, and it's up thousands of pips from the old trade plan, and it's projected to go another 3,000 pips above. Not that it will, but it could, based on technical analysis and a little bit of fundamental. Okay? Okay? So it's kind of interesting. So not only do I say it has potential up, I'm talking thousands of pips, not hundreds. Greg says he might have to make changes soon. Yeah, we're all in the same boat, Gregers. We're all in the same boat. I don't see like a pressing need to switch, but one day it'll arrive. And when it does, honestly, it won't even be a big deal, in my opinion. Right? You're like, oh, I guess I have to use MT5. Don't matter to me, none. All right, here is a Euro Yen from last night. Very similar to the other ones. I want to keep it above this line. So today we need an up and then, of course, a break. That will only happen if everything goes up. Okay, cool. So that'd be broad-based risk on. I don't know if that'll happen, but my stop's at break even, so I don't care. Aussie, it's sort of a less good trade. I stayed away from it last night, and it seemed to be the right thing to do. Also, we have an active trade plan. So one of the stop, look, and correct trade plans was actually selling this. I believe it was on Hell's Trade. No, it wasn't. No, it wasn't on Hell's. It was... Not Enrique, not Dakan, not Neri, yeah, whose trade was it? But anyways, we did talk about it. And I think it was it Boris? I think it was Boris. I think Boris had this trade. And I'm like, yeah, I totally get it. Yeah. Yeah, it was. Yeah, it was. Right, Milos? Yeah, thank you. It was Boris's trade. And I'm like, yeah, totally. So I promised not to trade against him. And so I bought others and left this one to fall, and it did fall. So anyways, good. So it means we had a really good discussion. If not only can you pick the ones that are going to go up, you can pick the ones that are not going to go up. Yes, what is the correlation between the Nikkei and the yen? Inverse. Okay, so one way to look at it is make sure they're all on the same chart time. 4, 4, 4, 4, 4, 4, 4. And compare. So you don't need me to answer the question. In the swing trading group, I think about 3 or 4 weeks ago, I asked people to follow the Nikkei every day and compare what happens with the Nikkei to what happens with the yen pairs, so that they would know from experience what the correlation is. I can tell you what it is, but the thing is, intellectually, if somebody asks you what the correlation between the Nikkei, which is this Japanese stock market, and the yen pairs, you will ask yourself, what did Wayne say? Well, that's not the right response. I want you to have experience. Remember, that's the whole point. I don't want you to try to rehash what Wayne thinks and rehash Wayne's opinion, right? I want you to be independent. So I want you to have the experience. And you can say, if somebody asked you, you can say, well, I'll tell you what. I studied the Nikkei and its impact on yen pairs, and this is what I found. Here's the conclusion I came to. Now, of course, you can also just Google it, but it will not replace actual experience. So that's why we have this set up. So like, here's that Head and Shoulders I was telling you about a few days ago and then earlier today. This is plausible, okay? This is a plausible scenario, technically. Fundamentally, that doesn't make sense. So members of Quant-in-a-Box would, we talk about it a lot. When you look at the monetary policy of the Bank of Japan, this Head and Shoulders doesn't make any sense, but it could be short-run profit taking. Cool. So nonetheless, you would watch what's happening here and take it out here. So, for example, if you felt like this is going to happen, we know that this is the right price for it. This is why I could draw it. Now imagine, just go back in the YouTube videos from a few days ago. We were down here, and I said, yeah, well, if it rises up to here, you would set this up for a fall. So so I drew this down to here, then up to here, and all that kind of stuff. At some point, I noticed the lower low, all that kind of stuff. Cool. So it's a crown pattern. So you would set this up here, which we did, and I drew it all. Okay. Now we're here. So if you believe we're going this way, I don't know what your hypothesis is. So and if you don't have a hypothesis, then you don't know how to trade. Okay, you're just reacting to everything. You have to plan ahead. So we talked about this 2 days ago. Now we're here. Now you might be on your 5-minute chart getting ready to sell, but you don't sell. You don't trade the Japanese stock market. Okay, but you might trade this. And if the Nikkei drops, then this is the trade that you're going to want to be on. Yeah? Great, right? And what'll happen is I'll break even on 2 trades today. That's okay. I don't have emotions attached to break-even trades. Okay. My entries were good. My projections were correct. I picked the right prices, the right times, and the right currency pairs. So if it's going to go up, it's going to go up. If it collapses, then I've been wrong on that one hypothesis, and I don't lose any money for being wrong. But if I'm right, I will make 300 pips on each of these trades. So right now, I'm a -3 333. I either lose 3 pips or I make 333 pips. I will play that game all night long. And if you're thinking AC/DC, yes. And out of respect, I will not sing it. All right, let's do the dollar pairs and then get out of here. Oh, I want to remind members of FX Bootcamp's day trading group. I will not do today's day trading group meeting at 4, as I usually do. My wealth management team at Morgan Stanley has invited me to volunteer for charity work. We are supporting a local food bank. And so I'll be out there feeding families. So I'm not going to be able to make it to the meeting because I have to be at the warehouse before 4:30. And well, swing day trading is at 4. So I won't be able to make it, but tomorrow's meeting, tomorrow's swing trading group meeting's at 4. And of course, that'll go off without a hitch, without a hiccup. It'll be perfect. So I won't be here today, but it's just a one-off. So, won't be around. Donating some time to charity. What is that called? Tithing? But I think that has more to do with money. Okay. Oh yeah, dollar pairs. Okay. Dollar's strong today. Oh, look how beautiful it is. Kicking it off the 21. Huh? Look at that. Just gorgeous. Gorgeous. Thank you, dollar. Mucho gracias. Okay. We have just, did we reach it? No, we didn't reach it. We still haven't got our buy price. Okay. The concern here, this is a bullish trade plan we did Thursday of last week. The risk here is this M3 predicts an M1. Okay, well, we don't know if there's actually bears. This could just be bullish profit taking. And the plan that's in play is basically this plan. Which one? I don't know. That's right. David, day trades are typically 99. Swings are 333. Okay. So when you go through the day trading course, David, there's a whole course on day trading. So when you go through the day trading course, one concept, well, two concepts that we discuss is the fade. The second one is the 33.99 OCO. Okay. You might favor, okay, a 51.50. That's up to you. Because you might not expect to hit 150 in a day, but it does happen. So you're like, well, if I have an unusually amazing day, well, I lock in 50% more profit for the day. So you capture the bulk of it. The second thing is, if you don't expect to hit the 150, which if, let's say, the average daily range is only 99, then you're like, well, I don't actually expect it today, but it allows you to move your stop and then adjust the limit as you see fit. Okay? Okay? Now, it's kind of like a covered call strategy. Okay? Where like using an option, you could say, okay, your strike price is, okay, what do we have this? Is this 110 or 19? I thought it was 109. Was it 110? No, that doesn't make sense. 110's up there. I can't even read that. So I think it's 8? No, 9. Well, I believe it's 108.89. That's what I remember. I can't read the price there. But anyways, I believe, if I remember correctly, that it was 108.89. So imagine that's your strike price. Okay. The max loss on this option, right? If the option expires worthless, you lose 50 bucks, let's say. And then it's a covered call would say, all right, well, you're also going to sell an option, write an option. It doesn't mean down. It means you're going to write an option that someone buys from you, and you say, so that gets rid of this target idea. But let's say there is a target. You could say, well, if this goes to 110.26, I'll sell this position to you. So it's like an exit. The nice thing about this exit is, let's say you're risking 50 bucks here. What if you made like $18 selling this? So you get paid right now the 18. You might lose 50, so now you've dropped this down to 32 bucks. So now you're actually risking, let's say, the 33 pips instead of the 50 pips, right? So you go back to that old OCO, but you get paid immediately. And then, of course, if you're right, this will go up, and it's like hitting a profit target, and you sell this position to somebody else. So now you get all this profit in here, plus you only risked, what is this? 66% of your original risk. And it's a covered call strategy because you actually own the position. Okay? So you buy an option here, and then you write an option there to lower your cost on this first trade. Done. Isn't that cool? So this costs you $50, but let's just make it better. But you made $20 here. So now your initial risk is only $30 because you already got paid the 20. And if your option expired worthless but cost you 50 to get in, now it only cost you 30 to get in. And statistically, that's a big discount, isn't it? You just have, and it's basically throwing a limit order. Wouldn't it be nice to get paid to have a limit order? But you're like, but wait, if you just let it run, you'd make so much more money. Yeah, but it's a form of hedge. What if you're wrong? Well, if you're wrong, you only lose 30 because you ponied up 50 today, but you got paid 20 today. So now it only cost you 30. Anywho, le fletulumum. Like I was, like earlier today, I broke down the different volatility profiles of like the Dow, the S&P 500, and the NASDAQ. If you were doing a covered call strategy, you would only do it on the Dow, or you'd want to focus on the Dow because it's lower volatility. Why would you limit your upside on growth stocks? That doesn't make any sense. Although I do it, to be perfectly fair, right? I focus on the S&P 500. Okay, then right, NASDAQ, okay, and the Dow, because I want broad exposure. Okay, so I get everyone's volatility. So you get, on average, less than NASDAQ and less than S&P 500, but you're going to get more than Dow. And you spread the volatility because you want lower volatility. Now, if you wanted to be a cool fund manager, what you do is you get rid of all the stock in the NASDAQ and S&P 500 that pay less than, let's say, 4% dividends. Oh. So instead of buying the index, you buy, let's say, the S&P 500 minus all companies in the S&P 500 that have a dividend income, okay, of less than 4%. So that might only be, what, 40% of the stocks? 30% of the stocks? Okay? And they're going to be more value focused, right, than growth. So you're going to have lower volatility than the S&P 500, but it's still going to track. The correlation is going to be very similar, right? Like 0.8, 80% of all the moves. Oops, I just killed all that. Didn't mean to kill it all. Now, how can I make money on this? What's the next step? Guys, how can I make more money if I just go buy the S&P 500 stocks that pay dividends of 4% or more? How can I make even more money without taking any additional risk? Or how can I make more money by taking some risk? Any ideas? Thank you, Jim. Perfect. That's exactly right. So now I can take these stocks. So I literally own the stocks, not the S&P 500. Okay. And I allow my broker to loan them out to short sellers. So let's say a short seller wants to sell $100,000 worth of my Microsoft stock. So I own Microsoft shares, I own them, and someone wants to short sell Microsoft. So I loan them out, right? I allow the broker to then match my shares that I own, loan them to the short sellers. Now, I legally still own them. It's quite legal. Like, they legally are only borrowing what I own. So I don't give up ownership. I don't sell it to them. I loan it to them. They sell it. And then at some point they have to buy it back and give it back to me. While they do that, remember, they borrowed $100,000 from me, so they got to give me $100K in, let's say, 10-year T-notes. So that goes on my balance sheet. This goes on their balance sheet. I retain ownership. I collect the dividend. Okay? They pony up collateral to make sure I have no risk. And then there's a fee short sellers have to pay. Oh. And that might be able to get my effective dividend collecting, or income, if you want to call it income. Dividend, so plus, let's say, plus dividend of more than 4%, plus I make another 3%, let's say, or 2.5%. It's probably closer to reality. So I pick up another 2.5%. We'll just say 2%. So now on this dividend stock, I make 50% more income. And all I did was lend it to somebody else. So even if the stock is flat, doesn't do anything at the end of the year, now I'm making 6% instead of 4%. Isn't that nice? And then I calculate an average month. This stock, I said Microsoft, but don't think Microsoft, but just think anything, just a stock. Let's say I own the stock and I've loaned it out and all that kind of stuff, so I've enhanced my income. But then I do some research and the stock on average goes up or down 4% a month. Plus or minus, okay? And then I do further research and find out in the month of July, which is coming up soon, it rarely moves more than 2%, plus or minus. That the volume and volatility, right? So what I could do is I own this stock and say, I'll write an option. Am I going too far with this? Is this too esoteric? You're like, what the hell is this guy talking about? This has nothing to do with Forex. I just like talking money. Am I going too far, or should I continue? Yeah, I lost you? All right, I'll turn it off. We'll go on. We'll go on. I'll do, what do you want to do then? Do you want to, what did we do? We did the dollar pairs and the yen pairs. You want to do Swiss franc or something? Oh, you want me to go on? Oh, cool. Right on. All right. So I got the stock. I'm collecting now 6% dividends instead of 4% dividends. On a normal month, this goes plus or minus 4%. But my research shows that next month, it's not likely at all to move more than 2%. So then I can write a call, so I can sell somebody. I'm not selling the market. I'm selling somebody an option. I'm creating an option. So I'm creating a derivative, and I'm trying to find some poor sucker. I got to find some dumb money and write them what I think is a worthless contract in exchange for money, because I'm a capitalist big dog. So I got to go find some idiot, find a sucker, and say, hey, I have a great opportunity for you. I'll write an option, and you can buy it from me, that says you can buy this stock for me and make a killing, and I'm going to write it 5% above the current price. And I think there's a 90% chance I'm just going to collect whatever they're going to pay me for this right. I'll sell you this stock way at this price, way up there. And they think it's great. Now, if it does go up there, I've already been paid, and I'll sell them something I bought lower, so I get out of the position, basically like hitting a limit, but I don't expect to get limited out. But there might be some idiot out there that buys this stupid thing from me, and I pick up money, cash today. Boom. Okay. And of course, it only goes up 1.3% this month. And, well, this guy bought something worthless, but I got paid. And it may not be a lot of money, but let's say now I get this up to, from 6, maybe I get this up to 7%. I've earned income through the dividend, collecting dividends. I've earned income through loaning the shares out. And I've earned income by selling some poor sucker a contract that was worthless, but he paid me for the opportunity. And so I've enhanced my position by about, what, 85%? And I haven't even looked at whether the stock went up, down, or sideways. I think we said 1.3%, right? Okay, cool. So my net asset value went up, but my income went up. So this is what hedge funds do, by the way. So I put that on my to-do list. I think I should do a course on hedge fund strategies. I think I should do a course on personal finance. I think I should do a course on real estate. I think I should do a course on cryptocurrencies. I think I should do a course on gold. I think I should do a course on trading stock indices. That sounds like the next 2 years of FX Bootcamp. What do you think? Is that the right course? Am I on the right track? Yeah? Adam's like, yep, yep, yep. Sweet. Okay, cool. Which one was most appealing to you? Which one would I do first? Hedge fund strategies, stock indices strategies, gold strategies, crypto strategies, real estate strategies, personal finance strategies? Which one is like the first one? Real estate and hedge fund strats. You know, you could even combine them, Adam, and do a Reg D real estate offering, which is an alternative strategy. Like a hedge fund is just a way to structure an alternative investment. So one of them is like a Reg D real estate. You might know it like a syndication. How many people, when I say real estate, what do you think? Do you think apartment buildings? Do you think house flipping? Or do you think syndications? Osamu says, make a poll. I will, just not today. Angel says, yeah, maybe starting with personal finance. Well, it's not necessarily true. I know what you're saying, and it could be true. But, I mean, I like it because personal finance is a foundation of, like, money. Oh, you think REIT? Okay, that's interesting. It would be something we'd cover. I mean, ultimately, we'd cover all of that. So at Harvard, I took a class on general real estate, and it was focused more on residential, just because it was basic concepts. And then I took another course at Harvard on commercial real estate. Okay. But like house flipping, I know there are certain funds that do it, but Adam, in my humble opinion, it's not a true hedge fund strategy. And I'll give you a classic example. As a Forex trader, if you sit at your desk and trade 15 times a day, and at the end of the day, you have all your trades closed, I don't think you're a Forex hedge fund manager. Now, you're a trader. You're mostly a scalper and a day trader. But there's no real hedge fund strategy behind it because you cannot compound. You're right? So a day trader and scalper can make a lot of money, but they never, ever, ever compound. They always stay small. And they never get big. There's no scale to it. Where a true hedge fund would not want to flip. You know what I mean? Why would you do all that work to only make 50 grand, let's say? So like that's typical. Like I'm not a house flipper guy, but the few YouTube videos that I've seen where these guys are like, I make so much money flipping houses. Look at this. Here's my recent deal. I made over 50 grand. You're like, dude, that's not a lot of money. And the amount of work, and the amount of risk, and the amount of everything that you do to make your 50 grand, there's just easier ways to make 50 grand. Where if you instead were able to build a portfolio. So for example, the amount of work it takes to own an apartment building. So you might not have the money, but you have to work up to it. But let's say if you own one house with one tenant versus, so a friend of mine, I forget how many units he said, but 50 or 100. I'll say 50. But a buddy of mine owns an apartment building of 50 units. I think it's actually bigger than that, but maybe not quite 100. So we'll say 75. Okay. He owns this apartment building, 75 doors on it. Great. Some are one bedrooms, some are two bedrooms, whatever. All right. So you compare one house to this one other property. So one property versus another property. The same amount of roofs, same amount of lawns, same amount of insurance companies, right? All this, that, and the other thing. It's the same amount of work, but here's the thing. You buy a house, you have all your eggs in one basket. It takes all this work. You do all this time. You go out, raise the money and bring in investors, bring in the banks, bring in everything. And then if you just flip it and make a 50 grand profit and then you pay taxes on it, dude, it's nothing. You're walking away with 30 grand maybe. Okay. What is that? A used Toyota? Right? Like it's just for all that work. Then, right? But then what you could do is then say, well, I never want to sell it. Well, then you're not going to get paid the equity probably. So you're going to own it instead, have the owners pay it down. And then once it amortizes, then maybe after a few years, you can refi it. Well, you can't do that now. But you refi it, you take some money out, and you go buy a second house. But then time goes by, now you own 5 houses. So a buddy of mine owns 7 houses. Different buddy, obviously. Different part of the country, too. So one of my neighbors, basically, one of my buddies, he owns 7 houses. Great. Awesome. But he has 7 doors on 7 properties. He has 7 lawns, 7 roofs, 7 set of windows, right? 14 bathrooms, like there's, whatever. But it's so much more work. He bought all cash, but let's say he had 7 mortgages, right? Like, it's just a lot. And things happen. One of his houses burned down. It happens. You might get a crazy tenant that stops paying you, and then you got to wait 6 months and get a marshal to kick them out. And this is all just money burning, right? Windows break, whatever, like stuff happens. 7 lawns, right? Or people are calling you, my toilet's broken. Oh my God, right? All right. So house flippers never scale. You're always looking for another 30 grand. And I'm like, dude, you always stay small. What are you going to do? 5 houses a year? Okay. That might even be too many. So the next one is own and never sell. But then the more you own, the more work it becomes. It's definitely a long-term game. And then the third one is like owning an apartment building. You have 1 roof, 1 lawn, but you have 75 families paying you money. Oh, well, the mortgage is bigger. The numbers are bigger. Yeah, but the work isn't any bigger. You understand? So my buddy with the 70, so like I'm talking about 2 different buddies. One guy owns 7 homes. One guy owns 75 apartments. And the guy that owns the 75 apartments works less. Now, he pays a management fee to manage the property, so he never goes to see it. He's far too rich to care about that kind of stuff. He doesn't want to collect the rent. He doesn't want to interview the landscapers, all that kind of stuff. So all he does is collect money. And the other guy, who also doesn't need the money, he's got the 7 houses, but it's a lot of work. When someone leaves a house, you got to find a new tenant, and you got to advertise it and post it. You get like 1,000 people apply, and then you got to do credit checks, and you find out most of these guys are idiots and all that kind of stuff. You understand? And it's a lot of work. Now, when they sell these homes, and I think they'll do it once we're out of this kind of real estate issue. So let's say in the next 5 to 10 years, they'll sell the houses. The houses would have doubled for sure. Let's say minimum of a doubling of their money. Okay. But they've been collecting, profit. Like they've been living for free. They have lots of money, but they don't spend any of their money because they're collecting all this income from the renters. So they've been living for free, right? And so let's say 5 or 10 years from now, they'll sell it, and all of a sudden they'll have what? I'll make up a number. Let's say $3 million profit. $3 million, boom. Or $4 million, boom. Or $5 million, whatever the number is, of free money that they can add to their pile of money to live when they're too old to give a damn about these stupid houses, right? But you can see there's a limitation to the scale. Flipping houses is a good way to get started, right? And then what? Owning a portfolio of properties is the next step. But I think a better way is to own one building and face the same amount of issues as one house. Right? It's just a scale issue. But they're all good. They're all good. Okay? It's cool. Everyone's done well. But you want to look at scale. So that's why, like, when we talk about strategies. Now, the next step then, Adam, is what if you don't got enough money to buy the apartment building? How many people would want to know how to handle that? You found the apartment building. You're like, oh my God, 75 doors. The property is in a good location. It's in decent condition. And the owner needs to sell. They need to sell. They're like, for whatever reason, they got cancer and they need to get out of these responsibilities and focus on surviving. So they got to like, but you're like, dude, it's $10 million and you wouldn't be able to put, 250 grand together to buy this, yet 10 million. So now what do you do? So there's a way that you would structure this. So this is the next step. You could structure a deal. Can you hustle a deal? And so what you would do is you need to find the property, set it all up, do all your due diligence, and then find a bank, set all of that up. So the bank says, okay, we need you to put, because you're new to this and you don't have a lot of experience, we're going to need you to put $4 million down and we'll put in the next 6. But, and a bank does this. They'll look at you like, how much experience do you have? What's your net worth? You're like, I have shitty credit and I have no money, but I need you to lend me $10 million. Like, dude, I won't lend you a nickel. Okay. So you got to have all that. That's why we got to do personal finance. Okay. So you go in and you're like, well, you seem to be a reliable person, but you don't have any experience on this. So to mitigate our risk on this deal, we like the property, but you're going to need to put more down. So if we do this deal with you, you need to put in 4 million. We'll put in 6 million. Brilliant, by the way. Sweet. So now you go and now you got to raise 4 million. So you structure this almost like a hedge fund where now you're the general partner and you need some limited partners, friends, families, and fools. Yeah. Or later on, because you're a hustler, right? A mother effing hustler. You know people, and the more deals you do, the more people you know. And of course, once their friends are talking to their friends, how much money you make them in a deal like this, all of a sudden everybody wants to be your friend and everyone wants to be in the next deal. So the more you do this, the easier it gets, I guess, right? So like, for example, I was talking to someone the other day about somebody he knows who is an amazing networker. A firecracker. He didn't say that, but I know, to me, the term is a firecracker. Do you know people like this that just knows everybody? They're like, I know this person, that person, this person. He was giving me an example where they were going to be late making a connection. They landed at an airport somewhere and they're going to be late. Because they had to go way to the other side of the terminal, or maybe even another terminal, where you have to leave, get on a bus, go to the other terminal, or get on a train, go to another terminal. And they're like, but it's just right there, but it'll take us 45 minutes to get there. And we got to get there in 30 minutes. And she says, well, I was here 3 years ago at this airport and I was talking to, one of the guys that runs the gate. And we had a conversation. He was a really nice guy. And I've kept in touch with him. And he's like, wait, what? You kept in touch with the security guy at this particular random airport? Yes. Because she keeps in contact with everyone, right? And he's like, really? She's like, let me give him a call. They're still on the airplane. And they're like, sorry for, you might miss your connection. So anyways, she picks up the phone, calls a dude, says, we need a ride from this gate to that gate. I don't mean like, because you still would have to get on a bus and a train. No, across the runway. He's like, sure, I got you. So he shows up with a car. All the other people are running, carrying their suitcases, running, trying to make the gate. And of course, they're not going to make the gate. And they just tiptoe into a car and they drive them across the runway to the next gate. And they walk up the plane. You're like, she kept in contact. So if you're like a person like that suddenly just knows everybody, and then word on the street is you make money for your friends on real estate deals. Yeah, as Jim says, friends, families, and fools. Yeah, your FFFs get bigger and bigger and bigger. Your network gets bigger. So all of a sudden, like you do this deal, all you need to do is raise the $4 million. And by the way, very often, especially again, if you don't have a lot of money, what'll happen is you can bring in the $4 million from all the other investors. And you say, well, my skin in the game is sweat equity. My blood, sweat, and tears. I found the deal. I structured the deal. I brought in the bank. I've done the due diligence. And so the four of you put in $1 million each, and we split it 5 ways. My equity, my sweat equity is worth $1 million on this deal. Jim's like, the first deal is the hardest. Yeah, but here's the interesting thing. Like we're talking about scale. You own this, so you structure this deal. It happens right away. Everything's good. And you're sharing any profits coming through with everybody 5 ways. But on the 5th year, you refi. The property's gone up in value and interest rates have fallen. So you get a new mortgage, and now you only owe the bank 50% of the property, or even 45%, because not only did you amortize, and the renters paid for that, which means the renters paid down the mortgage, so you don't owe 60%, you owe 50%. But then the property value went up, so now it's your mortgage as a percentage of that is even smaller. So now it's 45% of this, right, is owned by the bank. 55 is owned by the 5 of you. But the property value has gone up and the interest rate's gone down. So 2 things happen. Everybody gets some money put in their pocket. Everybody, the 5 partners might make $100,000 each because you just restructured the deal and you bump that debt back up to, let's say, 50 to 55. And you take that equity and you split it so there's a payout. But now your monthly mortgage is even cheaper because interest rates went down. So now your monthly income that you're splitting. So let's say you normally get $5,000 a month each or something. Great. That's been coming in for 5 years. Every month, each partner gets $5,000, which is not a lot, but it's something. But then after the refi, everybody gets $100,000, and now you make $6,000 a month. Doing nothing. Where a house flipper can't do that. And then, of course, you find a new deal, and it's a $12 million apartment building in a decent neighborhood. And you go to the bank and you explain the situation with them, and they want to pony up 70% of the money this time. So now the next deal, you only need 3 partners, split 4 ways. So now your piece of the pie is bigger, and the pie is bigger. And it's the same amount of work. Meanwhile, these things are on autopilot. You see? So would you like to see the contract? Would you like to see how to structure like the general partnership, limited partnership structure in a contract and all that? So I'm like, yeah. Heather says, that's a really interesting topic for a course. Cool. Yeah. Now, you guys are pretty astute. Have you seen a lot of other courses out there like that? I imagine there probably would be. But I don't know. I don't know. The other question would be, what are other people charging? What are other gurus charging for a course like that? Is it 500? Is it 1,000? Is it 2,000? I don't know. Like, let me know. I would never charge that much. I would never, ever charge that much. Heather says that, yeah, LSE has a course. I was accepted in that course. But I declined or deferred. But yes. See, that's the thing, like those courses, I don't know if they go into that depth or not. Maybe they do. I think that's a 2,000 pound course. Harvard classes are like, roughly speaking, $5,000. So I was thinking charging like 250 bucks. I forget. I guess somewhere between 90 and 98% cheaper would be fair. But I don't know. I just want to put it down. Right. So nobody's really answering. How much are they, or are there lots of things out there? A couple of people said no, there's not much. Yeah, well, see, that's the thing, Neri, right? Neri says, I have not seen the contracts and legal structures. Well, that's the whole part. That's what a hedge fund is, right? It's only a structure, a legal vehicle. And it's more complicated than you would think, because you could have a manager. So this is like a hedge fund, right? This is a hedge fund. Okay. Who manages a fund okay, that has a general partner who has limited partners, okay? And the general partner almost always is the manager, but different entities. So this is like BS LLC. Okay. And this is Hedge Fund LLC. But they're the same human beings, different entities, right? And then there's different ways of structuring this, like, are these shareholders or subscribers or just investors and all that kind of stuff? And the way you structure it, it can get quite complicated. And then if you start, like, then you might say, well, if I'm the general partner, can these guys gang up on me and fire me as the manager and kick me out as the partner? Right? So are these truly, is this a partnership? Are these shareholders? Or are they investors? I don't know, it depends on how you structure this deal. Literally the type of contract you write. So you see, like, are they simply investors? Okay. Or are they, right? Are they shareholders that get to vote at the annual meeting? Or are they partners in the firm. Yeah, well, no, an LP doesn't necessarily. It's just how you look at this, where this general partner. So like when I was done at Harvard, my professor that did the venture capital course, he said I was brilliant. And I'm like, well, I was already a venture capitalist, so so I did okay as a student learning venture capital. So I dumbed it down. I'm like, well, I have experience. So then he was starting a new venture capital firm because he was a VC himself. And he asked me, he's like, are you interested in being part of my new fund? And I said, well, as an LP or a GP? And he's like, as a GP. Cool. So I said, well, send me the docs, send me the terms. Okay. So I get all this. So cool. So what's the deal? And part of this was going to be a $100 million fund. And each GP has to have skin in the game, which is totally normal. So I would, as a general partner, put in $2 million. Okay, so if you had 5 general partners, okay, the GPs would have 10, and then you'd go out and raise money from these LPs, which could be other hedge funds, high net worth individuals, institutional investors. And they'll ask you, okay, so you're doing a 100M raise, how much do you guys have in? Oh, well, we're putting in 10M of our own money. Oh, it's very attractive. Like, oh, okay, you feel very confident in what you're doing and your ability to access deal flow. Okay, and they might have rules and all that kind of stuff that they need to follow to get this through their investment committees, right? So, is that how you're going to structure it? Okay? There's many ways to structure this deal. So, I think a course that doesn't cover that kind of stuff isn't a hedge fund course because it's all just law. That's all it is contracts, right? Oh, right on, Neri. Cool. And by the way, I did turn the deal down. Then they asked me to kind of be like the CEO of one of their portfolio companies. I turned that down. You want to know why? And I said, I love doing what I'm doing. That means I love working with you every day. This is cool. Okay? It's a lot of work, but I'm free to do what I want any old time. So I got to go. I have a busy day. I have lots of things to do, lots of trades to oversee, and then I have some charity work in the evening. So I think that's a big hoorah. A big hoorah! So again, I will be contributing to the effort to feed tens of thousands of families today. That's true, Grind, and they didn't beg big enough. So I... But you're right, Grind. Right. And and it makes sense. It's how you need to do it, right? I had a friend many, many years ago. She said that she was a material scientist. I'm like, wow, alchemy, really? I said, is there a lot of material scientists? She's like, well, in the Silicon Valley, yeah, but globally, no. And I'm like, what percentage of them are women? And she's like, almost none. I'm like, oh my God. And this was, I don't know, 20 years ago. Probably even more than that. But anyways, I'm like, you're kidding me. I said, do not quit. She's like, well, I want to follow my passion, my dream. I want to be a fashion designer. I'm like, yeah, that's good. The world's full of people that want to be fashion designers. Many of them are women. So I hope you do it. But it really, at the end of the day, 1 in a million, just like any other entrepreneur. 1 out of a million. I said, but right now you're a material scientist in demand in the Silicon Valley with all the great work, and you're female, and you make good money. All you have to do is show up and do your material science, alchemy stuff, whatever. But that's your job. I'm like, you can't just give that up. She's like, well, what do you recommend I do? I said, go back to your boss. And this goes back to like Grind's comment, right? You want them to beg. Go back to your boss and say, I want to work half-time. And in the afternoons and evenings, I'm going to work on fulfilling my dream of becoming a fashion designer. So, A, I'm going to work half as many hours. I'm going to work 20 hours a week. B, you're going to pay me my full-time salary. See, you're going to keep all my benefits because as a fashion designer out on my own, well, I need the benefits. I need health insurance. I need a retirement account and all that kind of stuff. So I'm going to work half as much. You're going to pay me all my benefits and you're not going to cut my salary, not even a penny. I said, that's what you should do. And she's like, there's no way they'd accept that. I'm like, well, then you're going to quit anyway, so what do you care? She was like, oh, well, you have a good point. And unbelievably, she took my advice and they said yes. Yeah, baby. Because you are 1 in a million. You are a superstar. We all have that. You have to have strong worth. And I believe in you. And I know you can do this. And with that, peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. Join FX Bootcamp. Use Trader's Way. Check out that free webinar that's in the links below. There's a lot out there for you. There's a way to improve. Cheers.